Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update. Well, last week we talked about the big decision this coming week was going to be whether or not the market was going to be able to break through that previous high that existed from the Wave 5 high back in January, and we got our answer on Friday. We did get a new closing high. Just barely, though, because if we take a look at the high that occurred back on the 26th of January, the closing high was 28.72, and then we come and look at Friday's close, and Friday closed at 28.74. So basically about 2 points on the S&P 500 cash index above that previous closing high. Those of you who've been watching with us and listening to these over the last several months should know the question that comes next, or already be able to state it, and we should be able to do this in unison. What do we need now? A follow-through day or a confirmation day, right? One day doesn't mean anything. So we did break and close to new highs, but a one-day close above the previous highs, again, doesn't mean anything. We need the confirmation or follow-through. And we had also talked about volume, and I'd mentioned that if we did break that high, because volume's been down on this previous upward move here, even though we're in the wave 3 and we know wave 3s are strong, doesn't always necessarily mean that they're backed by a lot of volume. And looking at the SPY to bring volume into the mix, you can see that really the only big volume we had, or above average volume we had, was on this pullback day back on the 15th of August. So as we moved up and then closed above that previous wave 5 high, really not a whole lot of volume. It was increasing a bit here going into Friday, but still not a lot to be convincing, and certainly not a lot, or enough, I should say, to scare the shorts at this problem yet. So they probably still feel that they have a chance for the market to test this high and then fall back down. Another thing to note is, boy, we have consolidation triangles in this move all over the place. We have this pennant pattern here, which, although it's not a triangle per se, it's very similar, as you can tell. It's just kind of like a triangle that's tilted on its side. And then we also have the fact that we are right at that previous high, and then a very long pattern of higher lows, so a huge ascending triangle in the market itself. So we got a larger pattern that's an ascending triangle, a smaller one within that triangle that's also a consolidation pattern, a pennant pattern. It's not one of my favorites. There are pennant patterns, there's flags, there's triangles. Those are all consolidation patterns, but I prefer the triangles. They're right in the Elliott wave. They're one of the Elliott wave corrective patterns, as you know, and they just, in my experience, work better. So we have our wave 3. We're right at that previous high. We broke it on Friday, so we know that Monday is going to be important to see if we get the follow through. If we do get a significant follow through day, I do think that we will see above average volume, or at least average volume, will kick into the mix once that occurs. But until that, we're still stuck with rising wave 3 here, barely breaking to new highs on not a whole lot of volume. So this could be thrown back. We could start to see the beginning of this wave 4 at any point in time, or we could continue on in the wave 3 for a while. I like to look at the DMI, and when we look at the DMI, which shows the strength of a trend, note what's going on in the ADX. Not only is it not confirming the strength of this move, we have clear divergence. So as the market's moving higher, the ADX is saying there's less and less strength to the move, and that goes along with what we just talked about with the Elliott wave consolidating triangles and the corrective triangles that are occurring within this wave 3. So all I'm saying is that we're up at these previous highs, but the move is suspect, and we have to be very diligent and cautious, especially if you have long positions. However, we do have some long positions that within our Elliott wave searches are working really, really well. In fact, from last week's recording, it's been an amazing week with the Elliott wave case studies that we've shown. Before we get there, let's cover the VIX, because we're right back down to that 12 level. We haven't talked about the bulls and bears of Investors Intelligence and that survey of investment advisors recently. The bulls are up to just over 57%. 55 is considered the high end, so we are moving. It wouldn't necessarily be considered extreme yet as far as extreme bullishness, but we are on the high end, so that plays into, again, being cautious for upside positions. And then we have the VIX right back down at the low area here, down around 12, and it doesn't seem like the market would be able to go significantly higher with a break of volatility back to the upside. We would have to break that 12 level and come back down, which we could do. Could go back into the lower trading range, or we see some sort of a pullback in the market. Regardless, it's going to be very, very interesting to see what happens in the coming week or two. We did send out in an alert an SPY strangle as well, because boy, are you going to get a better pattern than what we have here with those consolidating triangles. There's not much of a better pattern than what I just showed you with the pennant within an ascending triangle. That's about as much consolidation as you would expect to see. Well, let's look at the dollar real quick, because we had talked before last week's recording that this wasn't making sense. When we looked at the dollar moving up, it hit a wave 5 high, but it was moving up in this wave 5. And then when we looked at interest rates, we were in consolidation, and we were actually moving to the downside in interest rates. And if you've got a strengthening dollar in a wave 5, it doesn't make a whole lot of sense that interest rates are going down unless something is about to change. So those two weren't in sync, if you will. They weren't really making sense, but now it makes a bit more sense, because you can see after the wave 5 high on the dollar, we have pulled back. And it'll be interesting to see, are we going to make our pullback to the previous 4 here at this point in time, or are we resting and go make a new wave 5 high? But at this point in time, with the dollar pulling back a bit, again, that does tend to line up with interest rates dropping, so that makes more sense. Now we just see what happens with the regular market. Now, I did mention that our case studies from last week had a very good week. I showed you another consolidating triangle that we had on CLR, and we also talked about the fact that we had a doji right there in the middle of the triangle. And we can see that we do have the breakout from that consolidating triangle here, this symmetrical triangle. But note the interesting part of this. Again, we have to be cautious, and this is why when you put a triangle on, you don't jump the gun on taking one side of the triangle off. A common thought on a upside breakout like this would be, okay, we're breaking to the upside, let's take the puts off, save that premium, and just let the calls run. But we had the doji. The next day was actually a down day. Then we had a move to the upside, but it didn't break out of the triangle. That's key. And then the breakout day of the triangle was followed by a down day. We did not get the confirmation day, and then we moved back to the upside again on Friday. So my point here is maybe we do continue and this runs up and becomes a nice upward breakout, but we also have to be wary that that could be a false breakout and the big move is actually to the downside. That's still a possibility because we just don't have the confirmation yet. But the good news is it's moving, it's breaking out, and in the end, we don't really care which way it goes anyway. That's the beauty of the strangle strategy around these Elliott wave triangles. Looking at ULTA, just when we thought, well, maybe this is going to be one of the ones that didn't work. We talked about this at length last week where we had this little bit of a triangle here, and we were nearing what used to be the wave 4, but it just took outside, the length of time was outside the Elliott wave time parameters, so that's why we relabeled, and that we broke to the upside. So we had a nice upward move, and that out-of-the-money butterfly is now starting to gain value. So just when we thought this one might be one that we have to close and take a loss on, at this point in time, it's moving higher, and it looks really good, provided we still have a decent market. If we get a big correction in the market, then most stocks tend to go with the market. We'll have to see how that trades at that point in time. But as of right now, it looks really good coming off of this base. It built a very nice base here. I call this the launch pad effect. I live on the Space Coast here in Florida, so kind of my little play on words. But when you have a sideways consolidation where you have the same lows in this descending triangle where we keep coming down and hitting these lows, This horizontal line is like a launch pad, and then quite often we blast off from that, and that's what has occurred at least this week. Looking at PLCE, look at that move. Now remember where we were before. This one's already done just from the week that occurred over this past week. We had the, sorry about that, we had the previous move up to the previous wave 4. It was a wave 5 buy, so we're moving back higher here. Our target, when we talked about putting the out of the money butterfly, was put up in this area, and lo and behold, market moved and we blasted off. Look at that. As soon as we hit the middle of the butterfly, it backs off, but it hit the middle of the butterfly. If you wanted to be really picky, you could get upset about, well, it happened too fast. The one thing about the out-of-the-money directional butterflies is they still generate a gain on a directional move. If we wait a little bit longer, let a little time premium come out, you tend to make a higher percentage return. But boy, that's a good problem to have, isn't it? That you're complaining that the move happened too fast. Yeah, it's a good problem to have, that you had a profitable trade, but it happened too fast. You could have had made a little bit more if it took longer. But well, I don't know about you, but I'll take the profit and move on. So that one's finished. That one worked out exactly the way it was supposed to. No need to look at anything else there. Perfect wave 5 buy scenario, and you know we showed you this ahead of time. All these case studies are not back-tested studies. These are all that we've done ahead of time. Go back and watch the previous recordings, and you'll see those. And then the next one is Lulu, which took off here in this wave 3. Look at that blast-off move from where we talked about last week. Huge move, 10 points higher over the week. Again, the out-of-the-money butterfly generating a very nice gain. We'll watch this one close to see how things trade at the beginning of the week. If the market starts to weaken, we may just go ahead and take profits. You don't want to get too greedy here, but all of our case studies, every single one of them had a good week. So again, if you're still watching these videos, if you haven't renewed your data for your profit source or integrated investor, I just shake my head. SMH, I have no idea what you're waiting on, because you can go back and look at the previous recordings and see the power of Elliott Wave and what we've been explaining, and the fact that what we're teaching you is a little bit different than what you may have learned about Elliott Wave in the past, but how powerful has the results of these case studies been? It's mind-boggling, I would think. But the good thing is that if you've been following along, you're doing really well, and hopefully your trading has improved, and the bottom line, you're making money. So that wraps things up for this week. Hope you had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.